Hi, welcome to another edition of Lippers Fund Flows Insight. My name is Tom Roseen. Thanks for joining us today. Ironically, we watched as the discussions on the bailout from Spain's banking issue came around. Bankia S.A. basically is going through bailout discussions. We saw on again, on off again a bit with the Greek and their austerity program. Left says they don't want it. Right says that they should have it and stay in the EU. And of course, ahead of the Memorial weekend, we saw people actually go sit on the sidelines and get out of the way with all this bad turmoil going on. Ironically, though, we actually saw about $7.4 billion in net new money come into the conventional fund business for the weekend at May 30th. 2012. Well, let's take a closer look at the macro groups to see how this actually panned out. Equity funds saw a little less than $100 million in net new money actually fly out the door. We saw taxable bond funds take in about $600 million. We saw muni bond funds actually have a pretty good week, taking in a little bit over $400 million. And money market funds were the recipients of some of this fear factor, I think, seeing about $6.4 billion in net new money come into their group as well. And when we take a look, we want to dig a little bit deeper and to see what happened. What was this turmoil causing? Well, equity funds, as we dig down deeper into that group, saw that we had about a 0.63% minus return for the group. Not all that bad. And it was the fourth consecutive week that we've actually seen negative returns. May has not been all that good to investors. In fact, the old adage, sell in May and go away, certainly is apt, at least for the equity group. Total, we saw about $77 million fly out the coffers of equity funds. Very low amount considering what's been going on. Domestic funds saw about $166 million of money leave their coffers, while non-domestic equity funds took in $89 million. Again, probably not enough to make any big deal about, but certainly kind of unusual that we didn't see kind of more money leave this particular sector considering what's been going on with the concerns. We took a little deeper dive and saw the international equity funds took in about $264 million. This is despite hearing, this turmoil, debt crisis in Europe, hearing that China's, applying the brakes and the like. Certainly, we would expect maybe a lessening of money going into this group. In fact, we've seen just the opposite. And I think it's been an equity play. People are going after yield. Yields are usually a bit higher overseas. Well, that plays out as well for equity income funds. We saw about $144 million in money come into the equity income fund coffers, and this is the 55th week in a row that we've seen money come into this group. So certainly people are looking for yield. Well, let's take a look at what happened to ETFs. This has been a tale of two cities, and the tale of two cities actually occurs by equity funds taking in $3.4 billion, while the retail investor probably pulling money out of open-end funds, saw a little bit of a slight redemption. But if we take a closer look, we see SPY, that's the Spider S&P 500 ETF, take in about $3.5 billion, while XLE, which is basically the Spider Energy ETF, taking about $1.1 billion. And at the very bottom of the trail, we saw QQQ lose about $700 million. So overall, we've seen ETFs kind of go in and out of favor, but certainly this week I think we saw institutional investors seeing buying opportunities on the dip, and of course it is about the third or fourth week that we've seen negative returns in this overall equity market as a whole. So if we take a look though where investors have been piling their money, we see that fixed income funds actually did take in money, but it wasn't as big as we've seen in the past. They've actually had inflows for the 23rd week in 24, and they only took in about $637 million. That's pretty low on the side. It's the first week in 4, though, that we've actually seen plus side performance, but it really wasn't much to talk about. 0.02% positive return. That could have been a rounding error. And nonetheless, we saw government mortgage funds taking about $345 million. We saw international and global bond funds take $301 million. Here's that story again. People are going after international and global despite hearing slowing economies, bad news, debt crisis, and the like. People are putting money in. But let's see what happened on ETFs. The ETF side actually is something that if we take a little bit deeper dive, we see that the ETFs took in about $1.3 billion in net new money, and that was primarily in government and Treasury-related funds. We saw about $768 million of net new money coming into government and Treasury funds into this group and the ETFs. And particularly, one of the big winners taking in money was the iShares Barclay 20 Plus Treasury fund, which took in about $430 million in net new money of that group as well. Well, a story we've been talking about for some time now has been, what's been happening to muni bond funds. And certainly, as we've seen some turmoil come around, Treasury-related issues, coming on fire, doing better. we've actually seen munis do well as well. So this is the first week in 3 that we've actually seen positive returns on the muni side, about 0.08%. Not a lot to talk about either, but it was the seventh consecutive week that we've seen inflows into this group. National munis took in about $357 million of the $426 million into this group, and of course the remainder went to single state issues as well. So as we take a look at it, I've been talking about crisis. We have seen institutional investors perhaps parking money, for quarter-end needs and that type of thing. But maybe it was just that sell and may go away attitude, so they thought they'd park it over the Memorial weekend. We actually saw about $6.4 billion of net new money come into this group. It's the second consecutive week that we've seen inflows. Taxable money market funds took in $8.5 billion, and of that, institutionals funds actually saw $11.6 billion of net new money come into their coffers, while we saw about $3.1 billion in outflows from the retail side of money market funds. And tax-exempt money market funds, as the trend has been, saw about $2.1 billion in outflows this week. Well, as we take a look at what's going on, we had some news this morning that was a little bit discouraging. We saw that the non-farm payrolls came in around 69,000, which was well under the expected amount by economists. That was very discouraging. We've heard some bad news again about Spain and their, the banking crisis that's going on there, and of course Greece is on again, off again type of situation literally every day, and it has been moving the markets quite a bit. One good thing that we heard this morning was personal consumption was actually on the rise, went up 0.2% for the month of May, and as we looked a little bit deeper, that was lower than expected. I think analysts expected 0.3%, but nonetheless we are having people out there spending, so the United States economy does seem to be tooling along. There's concerns that the a double dip recession in Europe could certainly bleed over into the United States. It could be a problem. But in any case, we'll be able to look next week and see what the flow trends is and see if people really are taking this sell in May and go away very seriously for the remainder of the summer. Certainly next week will give us a few clues. If you want to do a little bit deeper dive into the areas that you have concerns in with mutual funds, you can certainly go to our website, lipperusfundflows.com, and do a little deeper dive on your own. If not, join us next week where one of our analysts will talk to you about flow trends for the week coming up. Well, thanks for joining me. My name's Tom Roseen, wishing you the best in your wealth planning and creation.